So the market has been on an absolute tear since Friday. If we take a look right over here, this was Friday. We ended up pushing straight up, basically pushed up to this first level of resistance, which was about 397 ish. And then over the closing time, over after hours and pre-market, we ended up seeing another push up, and that push up was up to that resistance level of that descending channel trend line. And that is very, very popular. We're going to take a look at an article. It's going to break down kind of their take on it, and then I'll have some comments about that as well. So that's pretty much kind of a quick breakdown of what we're going to be talking about today. The market's been on a tear. Is it going to continue? Are we going to continue to see that bullish momentum continue? Or should we be taking advantage of that uptrend? Should we be jumping into a long position on the market? Should we jump on a short position in the market? What do the articles say? What economic events are going on this week? And what earnings are being reported this week? We'll do a technical breakdown on the SPY and the NASDAQ. And then hopefully you guys are going to have a better understanding and a better idea of what positions you guys should be taking throughout this week in the market. So let's go ahead and jump into the article. Let's go ahead and exit out of the board and into the article. So this article dropped today at about 12:44 Pacific Standard Time, which was about 15 minutes before the closing of the market. And it pretty much reads this. So SPY gapped up above the 200-day simple moving average, which is this point right over here where we saw in the morning. On Monday, when the markets opened, big volume came in and drove the market ETF above a long-term descending channel trend line, which is this white one right here, and that we had marked out. It dropped up, popped up right above it on the open. The trend line has been a highly watched indicator by traders and investors since the SPY began trading under the area on January 5th, 2022. The break above that trend line provided hope to bullish traders who are looking for signs of the bear market that could be coming to an end. Although the SPY will need to reach about 418, up 20% from the October 13 low of 348.11 before a new bull market can be called, which is true. And I'll show you guys in detail why that is. On Monday afternoon at 1:40 p.m. and that's Eastern Standard Time, the SPY reached a 402.64 high right over here of the day and began to sell off, which dropped the ETF back down slightly below the important descending trend line, where a fierce battle between the bulls and the bears started to take place. And that will pan out. We'll show you on a smaller time frame. It's a little hard to see on a 4-hour chart. It's likely that the market direction may not be confirmed for a few more days, especially with Microsoft, Tesla, along with a lot of other earnings that are being announced, set to print earnings reports on Tuesday, Wednesday, Thursday, and Friday of this week. As the SPY retraces to test the descending trend line as support, a close under that area could suggest that Monday's bullish move north was only a bull trap. So I want you guys to keep that in mind. It could be a bull trap. Doesn't necessarily mean that we are breaking out. Even articles and analysts are saying that it could be a bull trap, and I'll really show you guys why that is and why that's an actual possibility. Now, here are some outcomes right over here as to what could be happening. If the SPY does close under the trend line, it's likely that the ETF will fall to test the 200-day simple moving average as support. If the SPY is unable to hold above the 200-day simple moving average, the likelihood that a bull trap occurred increases. Second option is if the SPY is able to remain trading above the 200-day simple moving average for a few more days, the 50-day simple moving average, which is this purple line, will be crossing the 200-day simple moving average, which will indicate a golden cross to form on the chart. This would suggest the price action between January 18th and January 20th was a bear trap. So that's another one to keep in mind. The SPY has resistance above the 402 and 404 zone, which is basically where we stopped out today and ended up seeing a sell-off after that. And it also has support levels at 394, 390, and then so on towards the downside, 397, or 387, 374 down here. So that's kind of the breakdown from this article. Here's a little chart, or the chart provided of the daily chart. So we're looking at a 4-hour chart on our chart. This is a daily chart. I'll pull up the daily in a minute, but I just want to show you guys what the article is showing us. So descending channel or descending trend, we saw that triple bottom on the inverted head and shoulders, ended up trending back up to this 180-day, 200-day simple moving averages, tested this channel trend line, this big yellow one, which is this white one on our chart, dropped down, came back up, and retesting this again. So this is basically what they're talking about here in this article, and we have exactly the same thing marked out on our chart. I think a lot of people do, just because this huge descending channel trend line that we've been seeing since the beginning of the year is very, very obvious at this point. It's been true for about a year, and it's this channel right here. So this white descending channel trend line and this bottom channel trend line, and we actually started forming a wedge here on towards, I think it started in October, and to this day. And this is kind of why we're at this point where we either need to break up to the upside or we need to make newer lows and have another leg down to the downside. Let's go ahead and zoom in. This is a weekly chart. The chart you guys saw in the article was a daily chart. We're going to move up, or we're going to move from the weekly chart down to the daily chart to the 4-hour chart and then a 15-minute chart, and break down everything on all those charts. And this is looking at the SPY. So again, descending trend line here that we saw. And one thing I want you guys to know is that we are trying to break out in one or the other direction of this wedge that we have been forming since October that I just mentioned. The channel that they were talking about, that resistance that they've been talking about, is right over here, this resistance level. And what they said was, if we close below 400, it was probably a bull trap. If we close above, there's potential for a move higher, right? The funny thing is we closed at 463 cents. So basically 400 is where we closed. So today was pretty much not helpful at all as far as determining direction. And so that's why our team, personally, our team trades reactively versus trying to predict, right? And so, you know, instead of trying to predict, oh, we're breaking out and then buying into a long position, we're waiting for tomorrow to open and see which direction it's going to be going in. And then that's when we're going to be taking a position in either a long direction or a short direction. And if you guys want to know what we trade, which ETFs that we trade, we actually trade inverse ETFs lately. Go ahead and watch a couple of the previous videos. I actually break down the two that we trade and then tell you guys what we do in order to profit on either direction that the market is going. The key is to identify the direction that it's going in, and then it's very easy to really take advantage of that. So again, close at 400. We are at the top of this wedge though. And one thing I do want to know, looking at the RSI, a pattern that is very, very obvious is this 53 to 55 zone that we keep approaching and end up dropping after we approach it. And here's why it's important. So the first time was back in March, end of March, beginning of April, where we pushed up to the upside top channel trend line. We were at about 54, 55, got rejected, sold off. The next time was back in August, same thing, reached this 55 zone, pushed up to that channel resistance and sold off. The last time before this was November 28th, around that date, ended up pushing up to this channel resistance and sold off. And guess where we're at right now? We're at that 53, 54, 55 RSI, and we're at this channel resistance. And that doesn't necessarily mean that we're going to sell off, but looking at previous patterns, if this trend line holds true, we would expect a sell-off to take place. So these dotted lines right here were some predictions that we were making. These two solid ones, I didn't change them to dotted lines, but these are predictions that we're also making here, that we're going to see a push up to the upside, sell off down to this support level, and then another push up. That could be still a possible option. However, I think instead of pushing up, we ended up pushing back up to this resistance, and we might have another, either a breakdown to the downside or a push up to the upside. So that's looking at a weekly chart. That's just a pattern I noticed here on the RSI, worth considering. Also, this wedge is also worth considering. Now let's go ahead and look at a daily chart. This was the chart that was in the article, and show you guys what we're looking at in the daily chart. One thing I want you guys to note was we did form a gap right over here. I believe it was on the 19th. We ended up having that sell off, and then the market closed. We reopened much lower at the support level here at 388, 389. And so we had to fill that gap. It didn't necessarily have to be that quick. However, it obviously was. We ended up seeing another push up to the upside, and we closed at 400 right at that top of the channel trend line, the descending channel trend line. The one thing I do want to note here is the fact that we are pretty much at that resistance level, right? And that's a very, very, very strong resistance level. So we need to have something really catapult the market forward, something like lower interest rates, or really good earnings that come out, which is two things that we are paying attention to this week, or something from the economic data that's going to be reported. The one thing that I do want to say is going ahead, and we're going to jump into a 4-hour chart. So we're just going down from the big picture to a smaller picture and to a smaller picture. And that's going to be able to give us a little more clarity as to kind of what we're paying attention to, what things we should pay attention to, and what signals or indicators we're starting to see that might give us an idea as to where the market's going to be going. Because obviously nobody knows, but you can prepare, right? So looking at the 4-hour chart, one thing, like I said, I want you guys to know is we did begin to form here let me go get ahead and get a pen. We did go ahead and start forming this candlestick reversal pattern. If we do continue to see more selling going into tomorrow, that's just going to confirm that, sorry, excuse me. That's just going to confirm that rejection of that channel trend line. And we're going to end up seeing more selling. That first level to the downside that we're going to be watching is going to be this 388, 389 zone. And it's going to be that 388, 389 zone. And then the level below that is going to be that 374 zone. So since this was holding as a strong support, the article did mention, we need to see a break below this 180 days and 200 days simple moving average for us to really confirm that all this was just a bull trap. The one thing that you guys have to consider is the fact that what we're seeing right here is partially, anticipation of earnings, but also anticipation of lower rates. So people are starting to price in the fact that the Fed is going to only raise rates 25 basis points. And that's not necessarily a good thing, right? Because the Fed might actually just do 50 just to calm people down and calm the markets down, because they don't want to be seeing a rally before it's too soon, right? They want to first get inflation under control. And then once that happens, obviously that's going to be, grounds for a rally to start happening, for the markets to start recovering once that gets under control. As of right now, inflation is not under control, even if the rates are going to be lower. So that's just something I want you guys to consider, is that, people are trying to price in that 25 basis points. If we do see 50, the market is going to drop significantly. I wouldn't say it's going to be like a 20, 30% drop possible, but I wouldn't say that that's what's going to happen, but probably to 374 for sure if they announce 50 on February 1st. But they are pricing in 25, right? And that's why we're starting to see that rally. One thing I also want you guys to note is that we have a lot of earnings coming out today, or not today, but this week. We have Tesla coming out. Let me go ahead and pull up a chart of all of them. Today we had Logitech. Nothing too big happened today as far as earnings. Tomorrow we have a big day. We have Verizon, Johnson & Johnson, Microsoft, Capital One, 3M, General Electric. Those are, I think, the big names here on Tuesday. Wednesday, we got Boeing, Tesla, AT&T, IBM, Progressive, NASDAQ. What else? ADP is a pretty big one to pay attention to. Thursday, American Airlines, Intel, Visa, Southwest. MasterCard's a big one to pay attention to as well. JetBlue kind of falling in with American Airline and Southwest. And I would say those are big ones to pay attention to. And then Friday, we have Chevron, American Express, those two are probably the bigger ones to pay attention to. So those are the earnings. Go ahead and, take a picture if you guys need to keep this in mind. You guys can also just go on Earnings Whisperers, and you guys can find this exact calendar so that you guys can be aware of what earnings are reporting when. You got before market and then after market. So Tuesday, Wednesday, Thursday are big days. And that's pretty much all starting tomorrow. So today we didn't have too much action happening. Also with looking at economic data, we didn't have too much happening today either. But looking at this entire week, we have some news coming out. So you guys should pay attention to those things. So tomorrow on Tuesday, we have the manufacturing PMI coming out. You have the services PMI coming out. Those are two worth noting for Tuesday. Wednesday, we have the crude oil inventories coming out. And that's pretty much the bigger one for Wednesday. And then Thursday, we have the core durable goods order month over month coming out. The GDP on Thursday as well, huge right here. Really important one to pay attention to. GDP price index also. We have jobless claims, initial jobless claims coming out on Thursday as well. Thursday is going to be a big day for economic data. New home sales coming out as well for the month of December and then month over month. And then Friday, we have the core PCE price index coming out month over month, year over year. Obviously, PCE price index year over year for December month over month. Personal income, not too big of one. Personal spending, though, is a big one because that's really going to tell kind of the market and the Fed, how much consumer spending is going on. And then pending home sales as well, along with rig counts for, the oil rigs. And that's pretty much it for economic data this week. This can be found on investing.com. The times here are based on the Pacific Standard Time because that is where I am based out of. So I'm going to be looking at those times for that. You guys can obviously set those to your own times. So that's kind of what's going on with the economic data being released. And going ahead and jumping back into the chart. Again, so, although we saw all this action happen today on Monday, Tuesday, Wednesday, Thursday, and Friday are going to be huge. So the rest of the days or the rest of the week is going to be pretty massive. So if we do start seeing rejection on Tuesday and a sell-off begin, that's just going to confirm that we did get rejected off this channel resistance trend line at the top. So big picture, that big channel resistance trend line that we were seeing that has been going on for about a year. And a lot of people are saying that, hey, we might actually break out just because so many people are expecting it. So, instead of selling off, it's just actually going to break through. But at the end of the day, there needs to be data supporting the fact that it's breaking out, right? Or earnings or economic data or rate hikes, right? And so as of right now, everything's still kind of up in the air. We closed at 400 instead of above or below. So again, today makes it a little more uncertain, but what you can do is you can prepare. So the levels we're going to be talking about, this is going to be the levels that you guys should pay attention to in case, anything happens, whether we're going up or down. So we're going to go over both. The first level on the way down that we're going to need to pay attention to is going to be this 397 zone. That's going to be that first level of resistance. That was a little too close. That was a resistance level on the way up on Friday. So that's going to be a support level on the way down if we're going to start seeing selling. Shouldn't be too hard to break above. It is a fairly significant one because we have held it last week and the week before. So it is an important one, but it didn't seem to have a trouble breaking up to the upside for it. So if it's going to be breaking down, I think it's going to break through it pretty quickly. The next level down after that is going to be 389, and that's going to be the 180-day, 200-day simple moving averages, as well as a support level that was established by price action from historic data. That's going to be the second level down. And then the level after that is going to be 374, 375 zone. So that's the levels to the downside. Looking at levels to the upside, if we do end up holding above this channel trend line, this resistance channel trend line, the very big one, if we do end up finding support on this resistance and start pushing up to the upside, levels to watch are going to be 410, 411. And then after that, it's going to be 420 to 428 to 430. And if we do break above these zones, above this first 410 zone, that's when you should start considering the fact that, you know, we might be reversing to the upside and going into another bull run. And then 430 is obviously going to be confirmation. Once we break 430, 438, 440 is going to be in the next level up to the upside. But what you guys should pay attention to for the rest of this week is going to be if we're going to be holding above or below this resistance level. If we hold below, we're probably going to see more selling. If we do hold above, we're probably going to start pushing up to the upside. So that's looking at the SPY. One thing to consider when looking at the NASDAQ, it's a very similar chart. I'm going to go ahead and zoom out so that you guys can see that, you know, for the most part, it pretty much resembles the exact same thing that the NASDAQ or the SPY shows. The 180-day, the green and yellow line, 180 and 200-day simple moving averages have been a resistance. And we're currently at that same level again. And so that's going to be indicating that we're going to be starting to see either a rejection and a sell-off like I showed on the SPY, or we're going to break above and start pushing up to these new higher levels. So what we're going to be looking at, we are going to look at a 15-minute chart here to kind of give you guys an idea of what's happening after hours here after we saw this move up to this resistance level. And what we're seeing is mostly sideways trading, but we are starting to see a little bit of more selling pressure than buying pressure. So that's giving us an indication that this was probably a bull trap, and we're probably going to start seeing selling going into Tuesday, Wednesday, and Thursday and Friday. But that really is going to depend on the earnings that come out and kind of the sentiment of the market. So hopefully this helps you guys out for this week and you guys have an idea. If you guys have any questions or have any stocks that you guys want me to break down, go ahead and drop them in the comments below. Like this video, share it with a friend. If you're not subscribed, make sure to subscribe. We drop these videos every single Monday night, and I'll see you guys on next week's Stock Talk video.